Welcome to etvFutures.com. It's Monday, October 22nd. I'm Remy Hokie for your Commodities Recap. NYMEX crude oil futures fell 1% due to profit-taking. Crude prices had been reaching record levels in the past previous sessions. And in geopolitical news, there have been reports that a ceasefire may be announced in the ongoing crisis between Turkey and Kurdish separatists in Iraq. There has been concern that oil production in Iraq may be disrupted. By session end November, crude ended down by $1.04 at $87.56 a barrel on the year. In petroleum products, November heating oil fell 1.97 cents at $2 and at $31.09 a gallon. And November RBOB gasoline lost 3.53 cents to end at $2.1334. Meanwhile, November natural gas fell 15 cents to close at $6.0891 per million BTU. Over in the metals complex, gold futures ended the session lower. There was selling pressure for the precious metal as the U.S. dollar rebounded against most of the major currencies. The metal recovered from an intraday low of $751 an ounce, and December gold settled down by $8.40 at $7.60 an ounce on the NYMEX. Other metal prices were also lower on the day. December silver shed 8 cents to close at $13.55 an ounce. December copper lost 6.5 cents to close at $3.4865 a pound. Meanwhile, January platinum lost $8.80 to close at $1,439.80 an ounce, while December palladium fell $7.35 and at $365.15 an ounce. This afternoon, we're joined by James Mound from James Mound Trading Group and author of the Mound Report. He'll give us his commodities outlook for the week ahead.
This is James Mound for MoundReport.com with the week ahead for the week of October 22nd. Key focus this week is less on reports and more on market reaction from the S&P's massive sell-off. Today we're seeing a strong U.S. dollar rally, falls right in line with my expectations for the G7 Economic Summit to put in force a euro currency sell-off structure in the market any way they can through any monetary policy that they can, simply because the European Union cannot stand economically to sustain the euro currency at these prices. Their export business goes out the window. This is going to cause some stabilization in the U.S. dollar, something that's much needed, and it should cause a major correction in the gold, silver, and crude oil markets. And the crude oil market's a little bit of an independent issue on its own. We tested $90, couldn't hit it. We're seeing some strong selling pressure come in after that. Friday's trade action was very important. This year, we've seen a lot of things happen in the crude oil market where, statistically speaking, 80-85% of the time we're seeing positive closes on Fridays. People are short covering going into the weekend. Friday was significant psychologically speaking because we broke down on the close on Friday, closed negative, and today was good technical confirmation that not only did we follow through with a severe negative opening, but more importantly, we sold off after the market corrected much of the early morning sell structure, closed it down about $1 on the day. And that's a good bearish indicator for that market, and I suspect that will continue to pressure to the downside in crude oil. We'll see some continued weakness in the metals and a strong dollar market over the next couple of weeks. The market is setting up to get prepped for next week's Fed meeting. I think we'll see a lot of choppiness this week, but the overall trend is strong dollar, weak metal, weak crude oil. And the S&P is a whole other story in that we've seen the market really create a bit of a stable environment today after a huge Friday shakedown. I suspect that we'll see the S&P continue to have a sell structure in it, but a bit of consolidation and choppiness along the way. So anytime you see a big 40-point down day in the S&P, look at selling some put premiums there. You might get a good value out of your puts, and I don't think the market has it in it to necessarily sustain significant 30, 40-point down days consecutively speaking. We get a lot of buying coming in when we see some strong selling in the market, funds putting some cash to use, that type of thing. Last but not least, take a look at the orange juice market. We had a cold storage number coming out here this afternoon. Critical market action going on right now. We had a very volatile week last week following the previous week's juice yield report showing much lower than anticipated yield numbers out of the juice from the USDA OJ crop report. And I think that we're going to see the market stabilize after correcting all the way back up after a huge retracement. We're sitting there at 210, dropped down to just under $1.15, and now back up to the $1.60 area. This market is probably going to develop a congestion pattern here, but this report's critical. If it's extremely bullish and they're showing low inventories along with a low juice yield, this market really could take off to the upside. If not, look to sell call and put premium, short strangle the market, collect some premium because it'll be stuck in this trading range for quite a while if we don't get some bullish news today. Other than that, take a look at the metals markets again. If we see a bounce out of the gold market, look to sell some call premium short term and buy some puts, which are still remaining relatively cheap despite today's downside volatility. And that'll do it for me, James Mound, MoundReport.com in the week ahead. We'll see you next week.
That was James Mound from James Mound Trading Group with his commodities outlook for the week ahead. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on etvFutures.com.